Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Shawn Douglass, CEO of AmberData, to discuss accelerating institutional adoption of crypto and other digital assets. Shawn, it's great to see you. Welcome to Trade Talks.
Hi, Jill. Thank you so much. It's a pleasure to be here.
All right, you got it. Can you point to some of the recent significant events around institutional adoption of crypto?
Yeah, absolutely. I think that the entire landscape is really evolving as institutional players start to embrace digital assets. There's not a bank on the planet, whether it that has not made major moves into digital assets, and also many of the exchanges are also starting to lean as well. CBOE buying RSX. I think you've seen regulatory clarity start to come into play now with SEC approving the Bitcoin ETF using the futures market as the underlying. And I think opens the door really for spot-based ETFs. And then we're starting to see OTC desk trades between Goldman Sachs and Galaxy Digital, and really every major asset manager on the planet is starting to engage actively in digital assets as well as in DeFi. I think there's a massive paradigm shift that is beginning, and institutions are fast underway to adopting.
Shawn, what are the key drivers that are accelerating institutional adoption of crypto and other digital assets?
I think first and foremost, there's a the global macro environment is pretty interesting right now, and I think that people are starting to look at as an emerging asset class as a place to be able to leverage digital assets where they can generate yield, actually have good transparency into what is happening. Also, I think from a regulatory frameworks, you're starting to see more clarity as well there. So the regulatory clarity there, I think, people are becoming more comfortable with what they can do and what is possible. And then lastly, I think that finally you have institutional grade infrastructure that can accelerate in a player's time to market, whether that be somebody like AmberData, where we're providing a comprehensive view across on-chain data and market data and metrics and insights. At the end of the day, everybody in financial services and institution are their data-driven businesses, and they need to have that insight to be able to understand opportunity, quantify risk, and plan their next move.
Yeah, I'm glad you brought that point up, because I think we get stuck in this mindset, okay, let's see what Bitcoin is doing for the day and how it correlates to the volatility we're seeing in the overall markets. But it really is, in fact, an infrastructure play and how we're building transaction systems and payment systems as we look forward on a global basis. It's not just about one asset as it moves up and down the chart. So with that said, can you speak a bit more about DeFi and what it means for financial institutions?
Yeah, absolutely. So this is the biggest thing that is happening. And I think in the future, we won't say DeFi, we'll just say finance. And if you think about FinTech 1.0, it was really just factoring payments out of banking. It was, and from that you had PayPal and you had, all of the payment applications that people use today, Venmo, et cetera. What DeFi is, it's factoring financial primitives out of traditional financial services and taking those out of proprietary closed systems and putting those on a network that allows the customers of DeFi and the people operating DeFi or creating these DeFi applications to literally have every single person in every business on the planet as their customer. And those applications are things like lending, insurance, and leverage products, and all of the financial primitives that you would go to traditional financial institutions, and those are being deployed on a less expensive, more transparent platform that has lower barrier to entry that has a total global market. So I really think that the composability of these financial primitives into new financial products is going to leapfrog where everything is going, and we're just getting started. We're going to see the adoption of this. We're seeing every large financial institution looking at, can we create structured products? Can we create derivatives? Can we generate yield that we can't get off of treasury bonds and traditional interest rates in a safe way? And can we create these products for our customers? So that's the biggest thing going on.
Right. Well, to your point before, we'll start to call it finance at the end of the day. I think it's really interesting, at least in the course of my reporting over the past 2 to 3 years, it seems to be less of the us versus them narrative and figuring out a way of how we're going to marry scale, right, with the technology that allows it to deploy quicker and with the transparency and so forth. I think that's really been the shift that I've seen anyway.
Yeah, I really think so. Because if you think about what is DeFi and what is cryptocurrencies and digital assets, it's really the financialization of the internet. First, it starts with financial products, then it's digital rights management, then it's taking and being able to create annuities out of cash flows across transparent processes between banks that used to just be, payment rails. You can now have those between companies, and it's kind of, you can go anywhere from there.
Yeah, certainly exciting. All right, Shawn, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you so much.